Welcome and thanks for stopping by. I'm Craig at Digital Micro Trading, and I'm going to talk today in this video about trading options 25.41%, and that's the past month. I'm going to talk a little bit about the process and start to delve in to the psychological game also. So let's get to it. Option trading secrets revealed. I don't know why it has to be a secret, but I'll tell you, when I was coming up and learning about the markets, option trading just seemed to be quite esoteric, and gamma, theta, the Greeks, all these weird names for options timed. It was very intimidating. I am showing my results, and I plan on doing this week after week that I take trades. So why is it a secret? I don't know, but I'm going to tell you and reveal how I've made it easier. So that's the number one answer. First is simplify, simplify. And I don't see any books really telling about how to trade options with a small account in a simplified way. So the number one thing is profit targeting a time-weighted return percent, not dollars. Don't look at the dollars. You've got a small account, you're starting out, you just want to prove the concept that you can trade options, you can do it profitably. What did I do for the week? What did I do for the month? And just keep that going on a rolling basis. And where I'm at this past week that we just concluded is 4.54%. You can see here how this line shows the dips. And on the bottom here, 25.41 is the last past month. So that's straight off the brokerage account here. And any good broker is going to tell you where you were on an ROI, return on investment basis. And you don't want to get hung up on it on a daily, that's for sure. So psychologically, I think a week, a month is the perfect blend of targeting. And 4.54 for me right now, I would say that's not super high, not low. It's a sweet spot, and that'd be something good to shoot for. 25% on the month is definitely above average, but I don't want to let myself psychologically expect that I'm going to do that every month, of course. Let's get into the process of trading. Okay, this is another secret. So I guess it's number two secret. Price location on the underlying options. So I trade SPY options, which is an ETF. The underlying asset on that is going to be the S&P 500, and I watch the S&P 500 on the futures. So we're on the December contract, and I want to know at any given moment if I'm taking an option trade, before I'm going to look at the option, I want to know what is the S&P 500 micro futures doing on the S&Ps. We call them the micros. And that's it, the most important thing right there, price location, just like real estate. So secret number one is not the option, getting hung up on the pricing on that and what the strike price is, how far out it is, the time decay risk. No, it's where's the price location. Secret number three, you need charting. You need to be hundreds and hundreds of hours into charting, watching price. What are relative equal highs and lows, session highs and lows, higher time frame price inefficiency, lower time price inefficiency. I use a software package called TradingView, and I got to tell you, it's the best charting package I've ever had in the many years that I've been in the business, either managing people's money for retirement or on my own trading. Definitely, I'd highly recommend you look at TradingView and look at the different packages because they do have great pricing ability to give you charting. So here is, again, what I'm an example, a quick example of what I look for on the charts. I've talked about this before in previous videos. Smart money risk management has to have some kind of stop, price stop, time stop, dollar stop. So I used this past week, for example, definitely a time stop. I didn't like what I saw in the charts. We were in a consolidation phase Monday, Tuesday, Wednesday, all the way into Thursday, Globex. And then right before the 8:30 Eastern Thursday, then we finally made the move for the week. But by that time, a lot of my patience had worn out, and I just basically got out of my position, took the time stop out, and didn't look back. You've got to have a process of managing the risk because it's tied with your psychology, your mental capital, which is just as important as your actual financial capital. Putting all the elements together in the recipe for a new week narrative is going to be a course on the story of news, earnings, FOMC, the economic calendar, time of year, day of week, time of day, higher time frame on underlying asset for directional bias. All these things need to be pondered before the market even opens for the new week, and I do that on the weekends. All right, this is the next secret, and again, nobody really ever talked about this for options trading, which is higher time frame structure transposed on a lower structure. So I'll say it again. Higher time frame structure transposed on a lower time frame structure. So if I've got a 4-hour price inefficiency or a daily, if I see something, I'm going to note that on a 5-minute chart or a 15-minute chart. Examples of that could be buy side liquidity, sell side liquidity, a premium or discount array, or just general price inefficiencies. So this is a really big secret. Again, not told for people that trade options. And again, what I'm talking about is charting the underlying asset, not the option instrument. It's not about that. It's about the underlying asset that the option contract covers. So here's the thing that I look for options risk. Okay. 4 elements. Number one, they've got to be in the money already. When I'm looking at the underlying asset, which is the S&P micro futures, and I've got that priced out, and then I go look at an options contract that's going to be at least 75 to 100 days out. It's going to be a long only option, put or call, because the maximum risk is already defined. I can't lose more than what the actual contract costs. And it's going to be a cash account. I'm not going to go out and go on a margin account. So those are the basic rules right there. In the money, long only, cash account, 75 to 100 days, time decay risk. All right, that's the sweet spot. So it comes to grading how I did for the week. And of course, the 1 week 4.54 was based on 2 trades. And you can see I did a round turn. It first started on November 8th, 1:11 Eastern in the afternoon. I took out a 1 contract put. You can see that right here. And then I got rid of it here on the 12th. Okay. So that was Tuesday and almost 12:56, almost 1 o'clock. So I held that kind of long, but not too long. Notice it was just 1 contract. Okay. So next I want to go into the second trade of the week. This is the trade basically that I have a little bit regret that I'm working out over this weekend because I let it bother me. I had poor location was the bottom line. The analyst, Craig, was great on analyzing the directional bias on the higher time frame, but the execution and having a little more patience, even if it would have just been waiting till Friday, I bought 2 contracts, not 1, because I had built enough of the cash account to afford to buy 2 contracts. I opened the contracts on buying puts on the 13th, 11:20 a.m. I closed the contract the next day, 10 minutes into the morning open. So I didn't even let price get into my favorite time, which is the silver bullet 10 to 11, because I was so hung up on the poor location. And I let that override what was really happening. What was happening is we had a big decline, and I would have been potentially the trade of the year for me in an options. And instead, it was a very modest profit. Now, I don't begrudge a 4.54% ROI for the week, but I'm just saying I have to take the lesson that I learned this week to heart and sharpen my mental and psychological game on the higher time frame. I keep preaching that. If you've got a directional bias, you've got to let it play out. And I had room to hold this maybe even into Monday next week because I bought this only on the 13th. So Wednesday, and I bought it late mornings. That wraps up the receipts on this. I basically given you the breakdown on some secrets that helped me a lot. And every week going through the trades, you can see 2 trades for a week is definitely not over trading, in my opinion, with the options. But once I got rid of this, I did not have FOMO on Friday because I was getting notifications from my broker. Hey, your option on your watch list is up 20%. I said, fine, not this train. I missed it. I'm going to have to wait for the next one. No problem. It's just going to be a long weekend for me. So I'm just telling you, you really got to be on the mental game with trading, not beat yourself up too much on what could have, should have been, but more on, did you follow your process? Did you have a plan? And all the secrets and steps that I just shared with you in this video on my process have really helped me with the regimen. And the number one thing that's helping me outperform my futures account with this options account, even though it's a lot smaller, is the discipline of not over trading. So over trading, I think, pretty much has handicapped my futures trading. So I'm learning how to be a better futures trader with the micros futures by how I've set my trade plan up with the options. So I just love it. I look forward to doing in a week another report card video on the options trading. Thanks so much. Hopefully, maybe somebody gets something out of this and it helps them. Aloha. Take care. Bye.